Welcome back. Today, we're diving straight into the massive, sudden AI and tech stack crash of June 2026.
So, how exactly did a Middle Eastern conflict absolutely wreck the biggest AI stocks across the globe?
The stakes were wild. South Korea's Kospi index nosedived a staggering 10% in just one session.
It all kicked off with a crazy chain reaction, triggered by severe geopolitical shocks in early 2026.
A major blockade stranded 20% of global oil, sending Brent crude skyrocketing right past $120.
This huge energy shock, it acted like a direct pipeline for incredibly sticky global inflation. Because of the conflict, the Fed was literally forced to crank its inflation forecasts way up.
New Fed Chair Kevin Warsh held rates, but 9 officials signaled future hikes, a brutal, hawkish pivot. This sparked a major valuation reckoning. Remember, higher rates are absolute poison for tech stocks, banking on distant profits. Enter CapEx fatigue. Investors suddenly snapped, demanding real, tangible proof of AI profitability instead of just hype. Why the panic? Because the top 5 tech hyperscalers are burning through a mind-blowing $755 billion. Sure, chip makers are cashing in, but massive power and infrastructure costs are totally crushing tech giant margins. The panic peaked on Black Tuesday, June 23rd. The U.S. sell-off basically triggered a catastrophic Asian market collapse. South Korean chip heavyweights Samsung and SK Hynix bled 13%, entirely dragging the whole market index down. Crazy retail leverage in single-stock ETFs forced massive liquidations. It became a vicious, tail-wagging-the-dog downward spiral. But hey, unlike the wild 2000.com bubble, today's AI giants are actually highly profitable and flush with cash. The real danger here, our market's extreme, fragile reliance on just 7 major tech companies. It's a huge bottleneck. Now, institutional consensus views this less as a collapse and more like a healthy rotation away from overextended stocks. Welcome to the AI market's second act. We're prioritizing capital discipline, real productivity, and pivoting from promise to proof.
So, as the blank check era ends, who will actually turn billions in AI spend into real profits? What's your bet?